Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of GoldStockData.com, as well as Bo Sears, who is CEO of Helix Exploration, ticker in the US, HHEXF, and their main ticker is HEX. Both of those tickers will be in the show notes. Welcome, gentlemen.
Yeah,
Thanks for
welcome.
having me.
Yeah, of course. So, Bo, I have a lot of money invested in Montana through another company called Stillwater Critical, which is PGEZF in the States, and really like that team. I've learned a lot about Montana and how supportive they've been over the last couple of years, and that's what originally got me interested in your story. So, would you mind giving us maybe a 7 to 10 minute overview, or just a few minutes of some, things that are going on at Helix right now?
You bet, John. Yeah, so Helix is a helium exploration and production firm with assets in Montana and only in Montana. One question you might ask is why helium? Well, without helium, we are living in the Stone Age. Quite seriously, most people think balloons and blimps, all of the visible uses for helium. However, its usage is predominantly in high-tech manufacturing and silicon chip manufacturing, fiber optic manufacturing. Every rocket launch you see requires pressurizing with helium, and the list goes on and on. So it is a very high-tech gas, and as you might expect, it is extremely valuable. So we have a niche company here whose primary pursuit is helium. We're not after hydrocarbons, especially natural gas. Natural gas prices are really not, conducive for its exploration right now. So what we are after is helium as a primary target, as opposed to its traditional secondary or tertiary product. That is, by natural gas processing with some helium. So from a processing standpoint, our projects are easy in that we are factoring out the air, the nitrogen in the gas, and what's left is helium. And we run that through, a PSA, pressure swing adsorption plant, which is a low cost, low energy method, economical method to extract helium out of the gas. And then we fill those with gaseous tube trailers to our end users or distributors, and off to the market it goes. So we are really excited about just the helium opportunity that we have, more specifically our Rudyard Project, which is just north of the town of Rudyard, Montana, which is 40 miles south of the Canadian border in north central Montana. And we have drilled 4 wells to date, and every well we have drilled has been a success. So we know it's a very large anticline. We've got a lot more wells to drill. The helium is there, the gas composition is there, and we're really, really excited about it. And in addition to the helium, we also have another really interesting component, which is geological hydrogen. Now, I would challenge all of your listeners and viewers to just Google geological hydrogen. It is all the rage right now. It's the greenest hydrogen you can produce anywhere on planet Earth. Right now, all the hydrogen that is produced in the world is via steam methane reforming. That is, you're taking natural gas and you're cracking it. You're cracking the carbon and the hydrogen, but the byproduct there, of course, is CO2, and the CO2 is just vented into the air. So it's a very dirty process. It's inexpensive, but dirty. I think it's pretty well known that the green hydrogen push, that is hydrogen produced via electrolysis of water, using a renewable resource like wind or solar, for example, that's extremely uneconomical. So all of the dollars are leaving that space. And so the next transition now appears to be geological hydrogen, where hydrogen is either present in its natural form in the earth, or it can be produced via stimulation through a process called serpentinization. In our project in Montana, we have all of the rocks present for geological hydrogen. In fact, the rocks that exist have already been altered. That is, hydrogen has already been produced. So given that, we are really excited about this deeper opportunity in the state of Montana for its geological hydrogen pursuit. So we've got a multi-component, multi-commodity platform here, and we're really excited about it. And you bring up the state of Montana. There is no better place to look for any commodity than the state of Montana. It is extremely business friendly. People are there. There's good workers, there's good labor, there's just good everything there. So we're really excited about the state. We think there's tremendous opportunity in addition to the ones that we have, and we're excited to get after it all. So just delighted to be here talking about it.
Thanks for the overview, Bo. That's great. You mentioned the four successful wells at Rudyard, and you said you have more to come. Could you kind of expand on what the game plan is there?
Sure. So the next step is most likely we're going to shoot some seismic, a very large seismic, just to delineate the field. This is a very large component. We have about 12 to 15,000 acres under lease, and it just makes sense to cherry pick where we want to drill next. But this field is capable of handling about 20 drill sites. So it's very large, and we just want to make sure that we hit it perfectly.
Okay. In terms of future revenues, I mean, I realize you're not producing yet, but you have a goal of producing in this quarter, correct?
Absolutely. So the plant components have been delivered to the site now, and we're just putting all the components together. It's been manufactured by a crack team at Wakota down in Houston, and all the parts have been assembled and tested and have been shipped up to Rudyard. We have built a house, as it were, a plant site for all that equipment. And we have built a gathering system for all the wells that we have drilled thus far.
So Don and I love near-term production stories, regardless of the commodity. Obviously, there's risk when you go into production. Tell us a little bit about your background in terms of the team and yourself.
Yeah, well, it's actually kind of a funny story, John. So I grew up in the oil patch, worked for the family oil company, and a fellow came in who was friends of my father's and came in with the opportunity to buy a helium plant in the year 2000.
Okay.
Dad bought it sight unseen, and when the fellow leaves, he looks at my brother and I and says, "Boys, I bought a helium plant. Now go figure out how to make money on it." So that is literally my foray into the helium exploration and production world. And thank heavens, because we were a traditional conventional oil firm. We were not doing the shale plays. This preceded the shale movement. So it was quite fortuitous, and it has been a really fun ride. So I have been drilling helium wells all over the country, well, all over the mid-continent generally, from Oklahoma, New Mexico, Kansas, Montana, all the way up into Canada, southwestern Saskatchewan. Had a plant up there in southwestern Saskatchewan called Mancota, and have just remained active. I've written a book called Helium: The Disappearing Element. Have testified in Congress with regards to producing helium on federal lands. So it is very much a commodity that is near and dear to my heart.
That's a cool story. So 25 years ago that happened, huh?
That's right. Yeah.
Okay. So last question for me, and then I'll turn it over to Don. I noticed on your share structure page on your website, share structure looks pretty decent on the stock overall. So congratulations on that. We see a lot of companies that are near production, and we interview CEOs that say, I'm sorry, there's 800 million shares out. We had to dilute. So it looks like you're under 200 million shares. Can you tell us a little bit about the share structure in terms of how much you and insiders may own in institutions versus just retail?
Yeah, we have about 186 million thereabouts out, fully diluted. We have 208 million shares, 30 to 35% of which is held by management, high net worths, family office types, the sticky type money. So
Right.
We're really happy with how we have moved into the institutional type investor and less from the retail. The volume has been, at least on the London Stock Exchange, has been outstanding. So we're really happy where we are from a shareholder perspective.
That's great. Well, Don, I'll pass it over to you for some questions.
Okay. My first question is the helium market. So, do we import helium into the U.S., and what percent of helium do we not import, use in the U.S.?
So right now, the helium market it's small compared to other large commodities, as you might expect. ExxonMobil is the largest domestic producer of helium in the United States out of their project called LaBarge Field in Wyoming. They produce a little over 4 million cubic feet of helium per day in liquid, and that accounts for 75% of our domestic use.
Wow.
The rest of the domestic supply comes from other suppliers. We, as in the United States, used to have a federal helium reserve, believe it or not. Back at the end of World War I, in fact, our government became interested in helium, and by 1960 we developed a strategic reserve for helium outside of Amarillo. And so that was at one point the gold standard of helium production. That handled most of our needs. When Clinton signed the Privatization Act, Helium Privatization Act of 1996, that's when we elected to get the government out of the helium space. So the balance of that gas at our Federal Reserve, our taxpayer-owned reserve, which was sold for nickels on the dollar, by the way, was sold to a German group called Messer. The balance of helium is produced in places like Qatar and Russia. Now, all that Russian helium, despite sanctions, they're able to sell their helium to China. So China, all of that helium goes to China. So we have been a net exporter of helium in the past, but we at some point will start having to import helium from other I would say geopolitically sensitive areas like Qatar and Russia.
Sounds like there's a potential export market there as well. So what does the helium price look like? Like the chart, say like over the last 10 years, copper has went up. It was like copper's like 250 and now it's up to like $5. Commodities on a whole have been kind of held down. Oil's low. So what's the helium chart look like over the last 10 years?
Over the past 10 years, Don, it looks like a good
45.
Yeah, a 45-degree angle up. But you bring up a really interesting question because there is no spot price for helium. And the reason why is because when the United States federal government was in the helium business with our taxpayer-owned strategic reserve, when Clinton signed that Privatization Act in 1996, they developed a formulaic price for the disposal of that helium. There was no markets, there was no supply demand function attached to it. It was just merely the reserves, debt divided by the reserves, and it was sold on that straight line basis. So for years, we as a nation were selling helium at below market prices. Meanwhile, that became the global benchmark price for helium. And it is the reason why we don't have more helium today, because there hasn't been any supply demand functions attached to it. And so it's a really important question. But as you might imagine, because of the dysfunction of that pricing has continued to escalate every year over year.
What does it correlate to, if anything?
Nothing. Very inelastic. Helium is a just-in-time inventory product. Once you produce it, you got to use it because there is no storage. For instance, it would be very difficult to have a helium futures market because there's no storage. There are companies that are trying to store it in underground caverns. However, that is a very expensive endeavor. There are question marks with regards to that complete functionality.
You mentioned it's used for chip creation, high-tech Silicon Valley when they create the chips. Is that the number one percentage? Like solar panels is number one for silver. What is chip generation number one for helium?
I would say it is close to being the number one, Don. The chips need to be grown in a helium environment, so as to prevent atmospheric contamination. So just think of it as a very sterile product, and many of helium's atmospheric properties lend itself to being the only gas that's being able to be used.
So,
There are no, for most of helium's applications, there are no substitutes whatsoever.
interesting.
The close second would be MRI manufacturing, and it requires liquid helium to make those MRI machines work.
Right. So AI is going absolutely bonkers right now, and chip creation is going bonkers. So NVIDIA, they like helium. Is that correct?
They certainly do. And as we are bringing more manufacturing to our shores, we're just going to need more helium. And it just makes sense to have domestic helium because it will be cheaper than anywhere else you can get, for instance, in Qatar or Russia.
What is your current market cap?
Current market cap in US dollars, I didn't look at it today, but 70 million or so.
Okay. And what's your current revenue?
Zero.
Are you zero? You're going into production.
Yeah,
okay.
We're going into production in November.
Yeah. Have you presented anything, any forward guidance as far as free cash flow, for instance, over the next few years? Do investors have any idea of the upside potential of your company?
Upside potential is high, right? We are starting off with these very few wells. Yeah. So we'll at capacity, we have 6 million a day of raw gas throughput. That's about $36,000 a day at the sales price that we are expecting, or $13 million a year. That's initial production. But the good thing about membrane PSA technology is that we can expand the throughput by adding more membranes, and it's a great way economically to monetize the gas as it is being developed.
What kind of margins are you expecting?
Good margins to produce this gas is probably in the range of $35, $40 an MCF. We expect to sell somewhere around $500 an MCF.
Wow, those are huge margins. Those are not good margins; those are huge margins.
Yeah, it's good. It's good.
Wow.
The cost for PSA is quite small. It's a low pressure system. And those are just kind of round numbers for the PSA membrane/process. The membrane is a static unit. There's no power requirement. Right. It's just you need to have consistent gas composition going through it to the PSA plant.
My last question is the hydrogen. So, I'll just to shorten it up there. So I'll give you a kind of an open-ended question. So, how much hydrogen do you think you're going to find, and what kind of revenue do you think you're going to get out of it?
Those are great unknown questions. We need to go. We have the rock that seemingly has already been altered and has produced hydrogen, but we need to core this. We need to deepen our last well. We need to core it, get some science out of it. We'll test it, and if there's any hydrogen coming out of it, there's the markets are. The market for green hydrogen is massive, as you might expect. It could go to ammonia plants. It could go to refineries, for instance. It would be the cheapest hydrogen you can get anywhere. But right now, the industry is in such an infant state that there's just a lot of question marks.
Okay, we'll keep up on the story. Thanks for being on, Bo.
Thank you, Don.
Yeah, thanks a lot, Bo. I just have one last question. You mentioned the 4 successful wells to date at Rudyard, and we talked a little bit about the numbers there. If I heard you correctly, is that the 13 million that you're referencing then?
That's correct.
Okay. So the last question I have then is, how many wells do you think you'd have 12 months from now?
12 months from now, it depends how aggressive we are on our drilling program. And some of the factors, the usual factors like rig availability and crew availability. We would like to punch 6 to 8 wells per year in this thing, maybe more.
Wow.
Mm-hmm.
Okay. And your market cap's 70 million?
I think as of today.
Okay.
Yeah.
That's amazing. So, congratulations on getting to production. I know it was a little bit of a delay looking at the news items, but doing it safely and the right way is always the right way to do it in our view. So thank you for coming on, Bo. We really appreciate the update.
Thank you, John. Enjoyed it.
So, Don, I found this through some research, and interestingly, I introduced Stillwater, gosh, I guess about a year and a half, 2 years ago, to some Montana politicians because of their rhodium, palladium, platinum, their critical minerals basket, if you will. And they formed some great relationships there to kind of echo what Bo was saying about the support from the state level, which is huge because we're seeing Trump now really get behind U.S. projects in general, right? Because it sounds like helium is yet another commodity that when you look outside of North American production, it's being produced in Qatar and Russia rather than somewhere that's friendly to the U.S.
Yeah, the supply demand dynamics are definitely interesting, especially with the AI, which isn't going away, and they're going to need a lot of this helium. So it's definitely interesting, and those margins they mentioned were huge.
Yeah, well, I mean,
So
my last question there, if you go from 4 wells to 8 wells, which I don't think would be a stretch, you're looking at huge revenue growth on a small cap stock like this. And the fact that they're literally going into production in about 4 weeks from this recording is pretty exciting stuff.
yeah, absolutely, it's definitely a company to keep an eye on.
Yeah. So thanks again for um, uh, those great questions, Don. We have a little extra time, so why don't we talk about macro and about what's happening in the commodities world outside of helium, hydrogen. The last time we talked macro, gold was flying high. We both were calling for corrections, healthy corrections, if you will, of 20 to 25%. And interestingly, when you look at some of the miners that you and I track and talk about, they have come off right about that number. We interviewed Next Gold recently at 92 cents. That hit 130-ish, not too long ago. You mentioned Serato recently. They hit around 118 and they're trading at 99 cents now, down almost 20% on the nose. We had a Fed day today, so it was kind of interesting price action. I'm not sure if you followed, but gold and silver and GDX and J were all up nice this morning, like pre-market, huge, quite frankly, and faded a little bit. But when Powell started to talk at 2:30 Eastern today, I don't have my notes in front of me as to his exact wording, so I don't want to misquote. But he was basically saying December's not a given, and that the market did not like. Because when I looked at the Fed Watch tool, which is called the CME Fed Watch tool, you can Google search it, that had a 91% probability of a 25 bip cut coming December 10th. And now he's kind of just saying over and over again during the press conference, that might not be on the table, which is kind of ridiculous. What do you think?
1 second, I was checking gold and silver prices real quick.
Sure.
So, yeah, I mean, yesterday, stock market's been on fire. We had an all-time high yesterday, and we closed just a little below it, 68.87. I mean, we're right. We were trading above 6,900. So we're basically the stock market's all-time high. There's tons and tons of pressure on Wall Street to hedge this. So you got a lot of hedging going on, a lot, and that creates. If the market doesn't go down, it puts upward pressure, it creates a squeeze opportunity.
Right.
And so that's one of the things Zero Hedge has been talking about is that the massive hedges create, kind of rocket fuel for this market because people have to keep closing these, they have to close them out. And it creates this squeeze. And so yesterday was really interesting. We had the breadth, which we had we had 80% of the stocks in the S&P 500 were down yesterday, and the market was up, which hadn't happened since 1990.
Wow.
Really unusual price action.
Right.
And it's basically a bubble. So the Mag 7 have been doing great. And they're actually going to be reporting. They probably already reported during our podcast. And so the Mag 7 have been ripping higher, but nobody else has been really ripping higher. Well, AI related. But this week, we're really starting to see kind of the worm turn here. So we're going into Christmas season. Amazon cuts, UPS cuts. It's like what's going on here, people. And the stock market's going up. There's a big disconnect there. But we've been talking about all these disconnects, and we've been waiting.
Yeah.
The labor market turned weak in May, June, and it's still weak. And now we're seeing more cutoffs. So the labor market has been deteriorating now since May, June, and that's usually the last shoe to drop. I really feel that gold is kind of front running this correction. So gold, it went all the way up to like 43.50, and it corrected 10%, and it's off a little bit. It's at 39.30 here. But and silver was all the way to 54, like 54.50, and now it's at 47.50, let's call it. So it couldn't hold 50. But I think that those big corrections might be foretelling what's coming in the stock market. They corrected first, and now here comes, in other words, that liquidity, it couldn't hold. It's like that liquidity went up there, gold ran really, really hard, and then everybody's going, something's not right here, and we got a big sell-off. And so gold and silver and the stock market have been trading together. They've been correlated since March of 24. And so this little gold going down and the stock market staying up, I think that it could presage a sell-off in the markets. I don't know when it's coming, but I really feel that we're not that far away. So we got another rate cut coming in December. You said that Powell might, try to fade that cut, but I think that cut's definitely coming. And so that's what's pushing this market higher.
Yeah. But that's what I brought up to my real-time email subscribers today. I literally put that out a minute after you said that. And I put a link to the CME Fed Watch Tool website showing people that it was a 91% probability of a 25 basis point cut. Yet Powell said over and over that the 25 basis point cut may or may not be on the table. And there was a lot of dissension among members, which usually there is not. If you go back to the 1990s, it's usually like a unanimous, right? But now we've got a different vibe at the Fed in terms of voting members. If you look at the last couple of meetings, there has been dissension. And Powell seemed different today, like on the mic. I'm not disagreeing with you. I do think we get that cut December 10th, but our sector sold off on that news. Like gold was trading up about 80 basis points. Silver was up 2.5%. GDX was up 2%. They all finished flat or down except for silver. And that all happened based on that comment. Like it was really volatile quickly.
Well, it wasn't gold and silver selling off. Those comments pushed the dollar down. If you look at the dollar basically jumped up to 99. So the dollar spiked on those comments, and that's what pushed gold and silver down. Well, it actually pushed gold down, and then silver followed gold, which it always does.
Right.
Normally when they cut, the dollar goes down, but now he said, so it was basically built in. But the irony, and then the 10-year, it went up because I'm not going to cut. So the 10-year is at 4%. And so you would think on a cut, the 10-year would go below 4, and it didn't. But so we got gold down 10%. We got the HUI down 20, about 15. We got GDXJ down 20. And so we've had these miners have kind of front run this correction. Now I've said that when the correction comes, it'll be 4 to 8 weeks to recover. So I think what's going to happen in November, I think the markets are going to stay strong because of the anticipation of a rate cut, plus its seasonality. November is one of the best months of the year. November and January are usually two of the best months. So I think the market's going to stay here strong. I think gold and silver are going to go up a little bit here. I don't know how much, but I think gold will get over 4,000. Might get up to 4,200 by the end of November, and silver might get about 50. But I think those are going to both trend up. But it's one of those things that you be careful in catching a falling knife, because I said that we're going to get a 20 to 30% correction. Now a lot of people to get 30, but GDXJ down 21. So I don't think the lows are in here. I think you need to look at 30 37,700, I think, is in play. 37 to 3,800 is in play here. That's what I'm expecting, and it could go a little lower than that, but I'm hoping not. I'm hoping 3,700 holds, and then for silver, 4,200. I think $42 is kind of the target for me,
Okay.
and it could go below that. So I'm hoping 42 and 37 hold for this. I think this is going to be the next cycle low, and then we're going to get new highs. So then we'll go above 4,400 gold, and we'll go above 55 silver on the after this we get this correction in. So and I think it'll happen before the end of January is my expectation, that these lows that I'm talking about will happen before the end of January, and the stock market will basically begin its crash before the end of January. And then I think we'll be, one last thing, John, I think we'll be below 6,000. So we're like 6,900 here. I think we'll be below 6,000 on the S&P really fast. When this thing turns, I think it'll be sharp. I think we'll get below 6,000 really big, just because of all the Momo money. There's a lot of Momo money in this market. Everybody's chasing it, right?
Yes.
And so I think it'll get below 6,000 really, really fast. And then that's when the market's going to have to prove itself. Can it get a base and then go back up? Or does it just keep breaking down? I think it'll keep breaking down. That's my expectation.
Yeah. Okay. Excellent analysis. Yeah, I'm very close in my targets for support levels on gold and silver. I think like 3,600-ish on gold and 41 to 42 silver. 42 took a while to break, and I think that will become new support. And so, again, 50 broke like butter. That's what I think the important takeaway is that I expected some problems between 48 and 50 that never existed. We just blew through 50. And yeah, we got to 54-ish. You know, it's normal to have a pullback when you see a meteoric rise in a metal. Like, it's not a stock, right? Like, this is a commodity. So I think this is a healthy correction. In other words, this is not like silver back to 30 and gold to 3,000. Like, this is not happening. So I'm telling people, you need to be buying this dip.
Oh, yeah, absolutely. This is a great dip to buy. You buy here, and then if it goes down another 10, 20%, you buy to the bottom here, because the gold's going higher. This bull market in gold is not over. Tell me why it would be over. Give me a reason. There's nothing. The U.S. economy is in trouble here. It's not getting back on its feet and everything's fine. Half of America cannot even pay its bills. Right. We got serious problem. The housing market, housing affordability is at an all-time low. Maybe not an all-time low, but close. It's a mess. You got the employment data is getting worse. You know, we had these layoffs in Amazon and UPS right before the Christmas season. And you're expecting gold to go down? I don't think so. So this bull market is got legs. Now, the key to all of this is the bond market. Can the bond market handle 150, 200, $250 billion every single month? And that's where really the key to it all. And I think that's the reason why gold's going higher, is I think that bond market is eventually going to break. And that's why I'm in gold and silver, because you just can't keep expanding debt. We call it kicking the can. You just keep expanding forever. You can't do that. At a certain point, people say no more. And who's saying no more is the foreigners. Foreigners are like, I don't want that stinking debt. You're just inflating it. I'm buying something that's going down in value. It's depreciating. So it's breaking. And here's my last takeaway is the gold silver ratio. So I started using Michael Oliver's, she's changed me. Instead of looking at, 80 to 1, right? He likes to use percentages. So if you divide, silver into gold, it's 1.2%. And it went all the way to 6% in 1980. Now, I don't think we're going back to 6, but I think, and the thing I like about these percentages is they're really easy to do the math on. I mean, 1% of 4,000, right, is 40. It's easy peasy. but 2% is 80. And I think that 2% is coming. 2% is a no-brainer. So all you have to do, and I think we're going somewhere between 2.5 and 3.5. So I'm using 2%. So you just follow the price of silver and just keep thinking 2%. So you go to 50, it's 100. I mean, excuse me. If you go to 5,000, you go to 5,000, it's 100. And so I think $5,000 gold's coming, and I think 100's coming. And it's irony that I used 5,000, 100, but I never thought of it in terms of 2%. I was using the 50 multiple. But I think Michael Oliver is absolutely spot on that the thing to use is the percent. And so 5,000, you go to 3%, it's 150. 2.5 is 125. So it's real easy math. And so
I just wanted to point out, like, if your thesis is correct, because you've been talking 5,000 gold for quite some time, way ahead of our competitors. So congratulations there. On silver, you've been using $100 price target, which is a longer term price target, correct? So if we see, I see a lot of people at 80, I see a lot of people at 100 now. They weren't around a year ago, 6 months ago. And they're pulling numbers out of a hat. They don't understand the market like we do. When you look at $50 silver and you look at inflation adjusting that, it's 67 to 70 bucks, let's say, right? That's kind of my target for next year, is the realization that 50 is no longer that big of a deal since we just broke it like butter. So you're going to see 60s next year, and $60 silver or even $70 silver, forget 80 and 100 for a minute. It is going to blow up some of these silver miners because they are super, super cheap right now. I want to go through a couple of names and then you can comment, okay? So I talked to BlackRock Silver last week. We never talked about them. We plan to have them on our show in the next couple of months. BKRRF. Andrew actually attended a conference where I spoke last year in DC, and we've been in touch ever since. They have a story in Nevada that's unbelievable. Like they have a really interesting story that's grown exponentially since I met him a year and a half ago, and the stock really took off. I talked to SilverX through you, right? We did an interview with Jose about 2 weeks ago. That one is HHEXF. They just announced after our interview, Don, that they're doing 40,000 meters. Like he had mentioned that 25 to 40,000 range, but it's on the high end. And that's exciting because they have high costs, right? And at high costs, you're not as profitable. That's going to eat into your costs. But he put in writing, like, we want to be a 6 million ounce per year producer. Like, that's pretty exciting stuff. And the stock's trading at 36 cents, right? It's like, again, they did a $21 million raise, I think it was. I could be getting that number wrong. I know it's over 20 million and it was oversubscribed. But that's part of the problem, is that the pressure, selling pressure on the stock is real. A lot of these companies now, Guanajuato, to mention the third one, GSVRF in the States, all of these companies, not BlackRock, but the last two I mentioned, all did financings, which are called life financings. Life financings allow people to hold the warrant that they would get, but they can sell the stock immediately. There's immediate liquidity. And this is putting massive pressure on stocks because when you get everyone thinking in that same kind of term, you're going to have a lot of selling, right? And it's immediate. You and I think differently. We don't think in the terms of 4 months. We think, 1 to 4 years. And we wouldn't be selling shares at these levels. We'd be accumulating. So that's my point, right? Guanajuato, 41-cent peak recently, trading at 24 cents right now. SilverX peaked out around 51 cents, trading at 36 close, 35 close. BlackRock, same thing. Beautiful looking chart, has consolidated, looks like a buy, and like this is at 60, 70, $80 silver, like the generational wealth opportunity.
Yeah, you mentioned your target was 60, 65. Mine's higher. I think we get to 70. Mine's 70 to 80. I'm a little more aggressive. If we get to 45, and my target for gold is 4,400 to 4,500. So 2% of 4,500 is $90 silver, and I don't think 100. I don't think we're going to get the $5,000 gold next year or $100 silver. But I think we're going to make a run at it. I think we're going to make a run at it. Maybe we only get to 4,500. But I'm very bullish gold and silver, so my target's a little higher. Now, as far as the silver names, I really like the silver names that have exploration, have development projects. So Silver Storm, who we just interviewed, their San Diego project, they're not getting any value for it. And then you mentioned Silver X. I really liked their PEA. I mean, 82 million to expand their production from 1 million to 6 million. That one, those two to me are very exciting. And then the other one that has a development, a couple others have silver development, Santa Cruz. Santa Cruz has a project that they're building that I really like. Those three are really interesting. I'm hoping Guanajuato does an acquisition. They need to find a way to grow production. And then La Precocia Vino, that's just growth. They're just going to keep growing La Preciosa. And then Endeavor, they got Pitarrilla. So I'm always looking. And then USA, I mean, America's Gold and Silver. That one, I think, they got 3 shafts. I think Paul's going to fill all 3. He's using 1 shaft right now. I think he's going to use the other 2. So I'm always looking for companies that are going to grow production.
Yeah, we interviewed Paul Hewitt from America's Gold and Silver. That ticker is USAS. We're going to have David Wolfen on the show coming up in about a month with the Vino. That one's ASM. We haven't heard back from Endeavor. I can never get a hold of them. But they have a good story, and it's a mid-tier, right? So that's positive. In Santa Cruz, Arturo had some nice things to say about us recently. He just sent me an email.
Nice.
Yeah, I think the one. So USAS had come out with production numbers after we interviewed Paul, and it's spot on from what Paul was saying in terms of growth. But what's not in the numbers yet is the fact that all of that antimony, all of that copper, that's all going to be revenue generating in their balance sheet as of Jan 1. This isn't like happening in 2 years. And they literally put in that press release on, if you go back and look at it, we're the largest producer of antimony in the US. Like, wow, like that's nuts. And the stock barely did anything. It's just unbelievable that people are this like turned off to like what?
Yeah. The one thing though, I hope I'm wrong about this. Paul said that he thought the antimony was worth the same amount of the silver. But there's a bit of a disconnect on their previous, maybe that's because they're going to increase antimony production, because they showed how much antimony that they produced so far this year. And I'm pretty sure it was less than 1 million pounds. I mean, I did the math on it, and it was only about, I think, $6 to $8 million in revenue. So we need to get some follow up on the antimony in January. How much revenue, and then they'll give us some guidance of what they're going to do. But right. Paul's really excited about the antimony, and that in news release because they showed how much antimony they actually produced last year, and the math. It wasn't, to me, it definitely will lower their cost. Absolutely will lower their cost. But it wasn't uber exciting as far as, same revenue as silver. We need to wait and see Q1 what the results are, because we're going to get more, what their cost will come down in January. I'm sure Q1 we might have to wait all the way until April. But they might give us some guidance. It's definitely going to help them, but I'm not sure it's going to be as. Right now, I haven't seen the uber revenue that antimony is going to provide for them.
Yeah. Well, I think being the biggest producer of antimony in the U.S. is going to give them a lot of, what's the word, just marketing love, because there's nothing else out there. It's like in terms of, I agree with what you're saying, but there's really nothing else. Like a lot of places that would produce such a commodity are in nefarious places like China. So they're just, I think they're going to get a lot of street cred and possible love from the U.S. government for that, because Paul struck me, and I think the same with you, as someone who's got a lot of skin in the game, and he's going to make the most of that aspect of the business model. And they actually approached me to attend both of my conferences after our interview.
Awesome.
Yeah. So I think that stock has gone from $5 on the nose almost down to $4 today. It's another 20
Wow.
percenter. So but it was at
Oh,
360
yeah,
when
I
we
wanted
ended
to
the call.
mention, I forgot to mention, I was going to mention this. So New Gold reported today, and
Oh, okay. NGD.
their ASIC was $1,000, 1,000. And they told us their costs are going to come down, but they came down faster than they anticipated. They're
Okay.
expecting they're expecting their cost to drop again. In other
Wow.
words, New Gold right now. I mean, they're in the United States or in Canada. You can't find a company producing an $1,000 ASIC. So
No.
unbelievable margins, right? Their multiple is a 5. It's
Yeah.
insane. And I want to point this out because I've been saying this over and over again that we're early. And the reason why you can tell you're early is because investors are not giving these companies any valuation. It should easily be double digits with those margins. $1,000 ASIC in a good location, and they got a 5 multiple. It's like it's
Right.
kind of nuts. Newmont is under a 9. They're under a 9 right now, their multiple. It's like it should be in the teens. And so until these multiples move up, so what's happening is Wall Street and these analysts are like, gold's not going to stay at these levels. It's not going to stay. Gold's going to go down, inflation's going to go up, and their margins are going to squeeze, and you guys are going to get screwed. I mean, that's pretty much what all the analysts are saying. And it's like they have sells on these stocks. It's like
But that's part of the opportunity is that
absolutely.
the analyst community doesn't have guts. They're like the herd mentality, right? Like
we're going to look back. We're going to look back at this and say, where can I find a stock with a 5 multiple? They don't exist anymore. We're going to look back on this. And you won't be able to find one that has a 5. They'll all be double digits. And I remember those stocks. I remember you can get those stocks for 5 multiples, not with $1,000. I mean, I wouldn't be surprised if New Gold goes to 20. Because their costs aren't going to go up. Their costs are going to go down a little bit. They're going to maintain.
It's just a matter of execution.
Yeah,
they had Rainy River issues many years ago, and they got rid of that Blackwater project to Artemis, right? Like they've had some changes at the leadership level. So
I'd love for them to acquire like Talisker, but that's going to kill me on Talisker. I love Talisker, but it's going to help them. I don't know if Talisker can, but New Gold right now, they have to be looking. Artemis and New Gold, both of those companies have to be on the prowl right now because they both have tons of free cash flow and they want to put it to work. And so,
right.
I don't know who those two companies are going to acquire, but Talisker seems like one that's right in the crosshairs. But maybe they can fend these companies off.
I'll have to look at that. I just talked to them for the first time a couple of weeks ago, thanks to you. There's a lot of juniors out there that hopefully will be able to hold out for higher prices before they get acquired. So
yeah, it's going to happen. But that's the reason why I want to own all these mid tiers, because those are the sharks. Those are the ones who are going to eat up our developers. So at least we get a little bit of a bump, because they're going to be very accretive deals.
Right.
So
I'll leave it there, but I did want to mention one other developer in the silver space, and that's Aftermath. Because I just had dinner with Michael 2 weeks ago, and they have some real exciting stuff coming. I think they've been publicly announcing that their MRE is due this quarter. I think it's going to happen in November. No one really releases important stuff near Christmas. If you have you work your teams harder to get that news out because that is material, right? But I mean, they already have 140 million ounces of silver. I think that goes up because they've been drilling with success, right? Like, I don't know how it goes down or stays the same. So I think that stock really has been hammered here because of warrants. You look at the peak around 81 cents US, it's trading under 50 cents US now. I mean, we just talked about 20% haircuts. This is a much bigger haircut. And there's a reason for it, right? But it's not a long-term reason. And that's why I always tell investors, like, when you get a gift like this, you have to buy more, right? Like, you didn't sell at 80, that's okay. Buy more at 49.
I love Aftermath. It's on my favorites list. I consider it a must-own stock. I mean, you got to love these big silver projects, especially when they're cheap. When you can get a big silver project that's cheap, it's like a gift. You got to wait to get paid, but as long as you're patient, aftermath absolutely makes sense.
Yeah, I agree with you. Okay, that one's HHEXF in the States, AAG in Canada. Don, it's always a pleasure. Thanks a lot for your insights. And we'll leave it there. Until next time, everyone. Thanks for your time.